Hi, I'm David Austin. I'm presently the chairman, president, CEO of Colonial Coal. Colonial Coal is a metallurgical steel-making coal company based in British Columbia with two principal assets in Northeast coal in a traditional coal area.
David, good to have you on. We've not met or spoken before, so I'm probably going to go over a bit of old ground for your existing shareholders and get people up to speed, and then maybe we'll get stuck into the project proper. Well, you're at the right side of the provincial line, aren't you? Because they're not having a lot of fun next door in Alberta.
Yeah, that's one of the things. I have actually met different companies over the years, and the reason why we stayed in our area is because, quite frankly, most of the coal mines that have gone into production over the last 10 or 15 years, all the permitting, I actually was part of that. And so I stayed in the area that I know we can get things done.
Right. Okay. And that's a big deal. And it's a nuanced thing because people may be reading sort of, very negative headlines about Canadian coal, but that is very much focused on Alberta. You're in BC. So in terms of the peers operating in and around your assets?
Yeah, Canuma's the company that's doing production. They're the ones who bought out the assets of my previous company. Anglo America has properties that we believe are up for sale at the moment. It looks like there's quite a few different entities looking at buying those entities. But the production at the moment is Canuma.
Right.
The Tech Cominco in Southeast BC.
Right. Okay. So you've got a couple of projects. You've got Huguenot and Flatbed. Can you just talk us through, just give us like headlines on what each of those is, and that because I want to get into what you're then going to do with them.
Okay. The Huguenot property is straddled both sides by Anglo property. The Anglo Belcourt South is immediately above us, and the Saxon is immediately south of us. Our property is in between. It's probably the principal amount of coal. It belongs to us. We have about 400 million tons that we got those figures from our drill programs. Our Flatbed property is up north. It's immediately adjacent to my old property, which is owned by Anglo. That's the Flatbed property. So immediately slightly to the left is Tech Cominco's property, which they've just sold to Canuma. And then to the right is Canuma's property, and then slightly further down to the right is Canadian Dwyer HD Mining, and immediately below us is Tech Cominco's property.
Right. Okay. And again, just sort of sticking with the kind of getting a ground up view of this before we get into the meat of it is your background. Obviously, you have sold a couple of coal companies previously. Again, give us the headlines on that.
Yeah, I was one of the founders with Dave Fawcett and Kevin James. We founded Western Canadian Coal, took it public. We went public at around 65 cents. We had a tough time because nobody wanted to be in the coal business, but that hasn't changed that much. And then about less than 10 years later, we sold it for $3.3 billion. At the same time as I did Western Canadian Coal, I did NEMI Northern Energy and Mining, and we sold that within days of selling Western Canadian Coal. We sold that to Anglo America, and we netted our portion. What we had left was about just, let's say, excess of 400 million.
Right. Okay. Now, you sort of indicated, like, maybe not much has changed, but not much has changed in terms of the kind of negative environment for, coal equities, but it's for slightly different reasons. Now we're looking, you've off the back of 2 years of hot and heavy ESG demands. You've got First Nations issues, and then you've got this overlay of this rather big anti-fossil fuel narrative going on in the marketplaces, which is affecting funds' ability to kind of keep fossil fuels in their portfolios. And it's also affecting companies' ability to raise capital. So does that concern you at all, or what's your take on that?
It eliminates some of the people that we were hoping to come to the table. But at the moment, we've got about, let's say, in excess of 15 NDNAs. Most of those NDNAs, if you were to break it down, a majority are steel companies. They're the people who end up needing our product. There is a few which are, let's say, and I'll go back to my history with Western Canadian Coal and NEMI. There is agencies that step up and buy coal on behalf of steel mills, let's say, for instance, in Japan or Korea. Mitsui Matsushima was one of the companies we did business with Western Coal and NEMI. And Atocha was the ones who we did most of the business with NEMI. So most of the people we have that have come to the table aren't dependent on bankers to put up their money. So the ESG issue isn't a major issue for them. There is a couple of companies we're dealing with that ESG is an issue. But they tended to be getting their funding from, let's say, for instance, there's a financial institution, or I don't know what you call it. It's called ICVL, International Coal Ventures. It's a financial instrument that's been created by the Indian government. There's about $5 billion being put into it to allow companies to acquire coal assets. The Chinese don't care. They've got their own money, and they don't really give ESG any issue at all.
Yeah, right. Okay, so you say so there are still people at the table who've got big balance sheets and cash available to them. You mentioned a couple of them, but you also kind of got the Indian China component and the kind of steel manufacturers. Are you looking for straight outright sale, or are there kind of various options on the table in terms of retaining some of the equity upside in this?
No, we have the assets up for sale. There is a possibility, Matthew, that one property could sell to one group and another property sell to the other. At the moment, we are dealing our preference is to sell both assets to one company, and we're focusing on that. But there is a possibility that we could end up having to sell one property to one company and one to another. The reason behind that is a lot of the Japanese companies have been willing to do open pit mining, but they didn't want to get involved in underground, and our flatbed property is underground. But things are changing worldwide, so that rule might not apply anymore.
Right. Okay. And just carrying on with this theme, it's a big project. So obviously some of the names you mentioned there, Mitsui, et cetera, the sort of scale that you're offering here is probably an attraction to them rather than anything that would put them off. Is that right?
Well, it's a world-class property. Like, for instance, the Huguenot property potentially can do 3 million tons, 4 million tons. But if you link it together with the Anglo project, it's possible you could get this up to 8 to 16 million tons. It really is that scalable. So that in itself is a world-class property. The flatbed property, well, it's probably somewhere around 3 to 4 million tons underground.
Right.
And we've only drilled 20% of flatbed. So there's massive potential on flatbed as well. These are world-class properties.
Absolutely. So, but you're suggesting that Anglo's potentially a buyer for that project, given it's got the infrastructure there already.
Anglo's supposedly got their assets up for sale, and there is quite a few different looking at. If another major group buys out Anglo, that could actually benefit us, because Anglo has been sitting on their hands for quite a while. Anybody buying out Belcourt will be, let's say, a lot more aggressive than Anglo's been. If Anglo changes its tune, then they'll become aggressive. So either way, we come out okay.
Okay, fine. So there's a lot to choose from on the BC side, the West Coast. So with regards to, obviously, there's been some slight changes in the market at the moment. China and Australia are friends again. They will be importing coal from China. Will be importing coal from Australia again. What do you think that's going to do to price? How's that going to affect your potential sale price that you're looking for?
Well, I checked with Australia last night. I was speaking to somebody, and they said it was $400 US a ton. We use in our PEA, we use 175 US a ton long-term planning, but even the Chinese and the Indians are now kind of accepting that it's going to be north of $200 a ton, somewhere around $225 US a ton long-term. If we were to change our PEA and put that into the equation, but I'm not going to. We're going to leave it the way it is. But if you look at the costs of our mining, then BC is not a cheap mining jurisdiction. So if we were looking at it and you look at it, what it's going to cost for startup, it's about $120 a ton Canadian startup. At $225 US a ton, even at startup, we make a lot of money. And then you look at when you get to 2 million tons, your costs are going to be around $100 a ton. At 4 million tons, your costs are going to be somewhere in the high 80s, low 90s. You're making a lot of money. Even if coal prices came back to 175 US a ton, you're still going to be making a lot of money.
Right. Okay. And if you look at what your stock price has done recently, obviously in February had a nice little pop of about 30 cents, which is great. And that's off the back of the news that you put into the marketplace. But I just want to try and understand with regards to, well, actually, your cash position is what at the moment?
About 8 months, 9 months.
8 to 9 months of cash. Doing what? Because you've got the option of just sitting back and doing nothing. If you're starting a sales process and if you feel there's enough information, because most of these big companies kind of take the data you've got and kind of reassess it, reformulate it in their own image, because they've got different, probably, well, I suspect they invariably have a different view about how they would come at it compared to a junior miner. So what are you going to do for the next 8 to 9 months? Sit in your hands and get a bid process over the line, or have you got more work to do?
We're going to get this over the line, but there's things we have to do corporately, and it's part of the reason why other coal companies fail. You have to do your environmental, you have to maintain your licenses. There's all kinds of things you have to do on it, and where I look at other companies that have failed to get the licenses and the permitting is because they didn't do the right thing in the first place. Our job is to maintain those licenses and permits and all the environmental studies that have to be done, so that we'll keep on doing that, and we'll keep the sales process going. But that's what we're doing.
Right, but you're right at the beginning of the sales process. People are signed NDAs, so they're in the data room currently, and they will they'll all go through a process, and at the end of which, hopefully, there's a few bids on the table. But how long is that process?
Yeah, Matthew, I can't really answer that, because if I give you a definitive answer, it could change today. It could be 1 week from now. It could be 1 month from now. The reason I get a bit concerned, because when we did the Western Canadian Coal in Nemi, it took a long time. And then one day, out of the blue, an Indian company threw a bid on the table, and the process starts. And then it takes over. Then it's basically an auction, and then it's the best bid wins.
Right. Okay. And someone sent in a question. I think they said it was a dumb question. I don't think it's a dumb question. I think it's quite a smart question, which is, when the bidding process starts, do you have to halt the stock? In which case, who's in control of that timing?
Well, I'm going to go by history here. With Western Coal and Nemi, yes, we had to hold the stock because the price was such a huge difference to the stock price. We did notify the exchange. We went with, and we have to take guidance from the exchange. Because of the figure, the exchange said we had to hold the stock and see if we could create an organized market and bring it back. We tried bringing it back, but the problem was the bid went up again. And then it went up again, and it went up again. In the end, we weren't able to bring it back on the way we were hoped to. And that more or less happened with Western and Nemi. And in the end, the transaction took place off the market, where people redeemed their shares by sending in. At the time, it was Montreal Trust. Today, it's Computershare. And they sent their shares in, and they then got their money by cashing the shares out.
Right. Okay. And okay, that's interesting. Then with regards to what you do and how you behave over the next 8 to 9 months, I get you've got to get your permits in place, and any other kind of administrative component. Are you doing anything on the ground, under the ground? Are you trying, because it's big enough, right? You don't need to do any work on trying to prove that this thing can get bigger, right? Okay, so you're not.
The thing is, we're at a scale now with it. We have eliminated a lot of people at 700 million tons. And let's say the previous transactions, the Riversdale transaction, the Jameson transaction down in southeast British Columbia, they went to $3 a ton in the ground. The recent transaction with Teck selling to Conuma, which is the Windy and the Window, which is immediately to the left of our flatbed property, they went for $3 a ton in the ground. So unless they wishful thinking, we get $3 a ton. That's 2.1 billion US. You've got to look at how many people can cut you that check.
Yeah.
So you eliminate a lot of people just because of the size of you that you're at.
Right, and you're sitting trading at about 30 cents a ton at the moment.
Yes,
so
right.
As far as you're concerned, there's a bit more growth on this to be had.
Oh, yeah.
But how do you capture that for your shareholders in the short term, or say over the next 12 months? How can you affect that?
Well, we won't be able to capture it in the stock price. That's we're probably going to have to face reality that we're going to end up in a very similar situation as Western and Nemi. That when we get bought out, the $2 a ton in the ground is, let's say we take that as a figure. That's still 1.4 billion. And then that's US, and yes, and that's what we're planning on doing now. It could be a combination of both properties, or it could be one property at a time. If it's one property at a time, that will create complications. But it's still something which we can work our way through. But it's when we are looking at selling the tonnage in the ground, not the stock price.
Right. Okay. And it's quite easy when we start talking about a sales process to kind of get a little bit excited. I'm sure your shareholders are a little bit excited, and maybe management too. But there's a lot of work to be done. You can't get distracted, and nor can you guarantee what the future holds. Is there a scenario for you where you don't get the price you want because of what's going on in the market? People feel that they can lowball you, right? Is there a scenario for you which says, okay, we'll take this thing into production?
We've formulated everything to do as a standalone to take it to production. I'm not planning on doing that. Some of the companies we're in discussion with are willing to do an arrangement where they buy us out and we stick around to take them into production. I'm agreeable to that because I realize that it's our expertise that they're looking for, but we can incorporate that into an exit strategy.
Right, but there's not a cost of capital scenario where you think, well, let's give it a go ourselves, because it's expensive out there. We've seen a lot. We've seen inflation ripping through. We've seen the cost of capital available to companies.
Actually, the companies we're talking to, like for instance, the Indian companies and the Chinese and Japanese companies, they don't consider 450 million to 500 million an expensive proposition for the amount of coal that they're getting back, and especially at these coal prices. What their concern is they're concerned about getting through the environmental and the permitting, which is what we're really good at. And so, yes, we understand that there's going to be contracts in place. They'll buy us out based on us helping them stick around. So, the staff are aware of it. I'm aware of it. When we get sold out, doesn't mean I'll be out of the coal business. I'll be in it for a couple more years.
Right. Okay. So it sounds like in terms of the route to market for you is a no-brainer, because everyone that you're dealing with, certainly who've signed NDAs with you and in the data room, they have their own markets. This isn't a case of how do we sell into the open market. Okay. Interesting. So a lot of the risk is being taken away from the how you get valued by these companies, because they've got a sense of what they're currently paying. Well, look, and by the way, do you want to talk us through some of the directors? Because a few names I recognize in there as well, helping you deliver this.
Okay, well, I don't have it in front of me, but I'm pretty well. I'll start from Mr. Bettacharian. He's more or less in the middle. Partha came to see me. We've had meetings with CIL and SAIL. CIL is Coal of India Limited. Partha had been the head of. He was the CEO and chairman of CIL. He'd come off the board. He came into town after CIL and SAIL had come in to see us. They had already met with or were meeting with Tech Kaminko. They've increased their amount of coal going into India by buying product from Tech. After they've had their meetings with them, they came and met with us. And I came to an arrangement because I realized if we want to do a deal in India, Partha had done practically every major deal in India over the last 20 years. Partha had done it. So I decided to bring him on because India has its own idiosyncrasies, and he knows how to deal with it. So I brought him on. We came to an arrangement with him. He's been very, very good over the last couple of weeks. He's been very, very busy, and he will be busy for the next while. And then Greg Waller became available. He had been with Tech. He did corporate development and investor relations. I brought him on because it allowed me to get his abilities to help support me in what I do. I really don't have too much skills. I really hire the best people. John Perry, who is our chief operating officer, he had done every drill program for Anglo, Tech, and everybody in our area, one way or another, had used John to look after and plan the drill programs. So I could use John. It probably saved me a lot of money by him telling me what the drill result was going to be before we drilled, because he could remember a drill program going back into the 70s. And we've been very successful in our drill program. A lot of it's to do with him. And then Ian Downing. Ian is, we have negotiators in this province. Ian had worked for the federal government and provincial government on negotiations. Ian and I had worked together for a while. I realized that he was a very, very good negotiator. So I brought him on to help me negotiate. You know what bankers are like to negotiate with.
Worst.
Ian. Yeah. Yeah. Anyhow, I like Ian. He's got a great sense of humor, and we get on well together. And he's a good advisor to me. And then Tony Hammond. Tony Hammond had worked for Anglo. He had run the coal mines in Edinburgh, just outside Edinburgh. So he brought a different skill again, and I've been working with Tony now from Western Coal to NEMI to Colonial Coal. So I've tried to surround myself with people who've got a lot more expertise than I do.
Well, it looks like they've done a lot of things rather than just talked about things, which we do see a lot coming on the show. I was in the near vicinity of someone who did something. So, well, look, David, just as an overview, that's a fantastic introduction to the company. I kind of wish we'd heard of it and had you on a bit sooner. But exciting 2023 lined up for you. So you got the capital. Yeah, you've obviously started well advanced in the process. So good luck to you. But do come on and let us know how things are going. Okay.
Yeah. Okay. My pleasure. And thanks for taking me. I enjoyed this. Yeah. Anyhow, thank you to everybody for listening. And if you need to get hold of me, there's a link on the website. Please, if you have any questions, just ask. The sales process is going on, and we'll get this thing sold.